Hello everyone, and welcome to another edition of IronFX Viewpoint. I'm Marshall Gittler, head of Global FX Strategy here at IronFX. Over the past few shows, I've been discussing the outlook for currencies in 2014. Last time I talked about the euro. Today, I'd like to talk about the yen. This graph shows a summary of the 75 or so forecasts collected by Bloomberg News. Again, the blue line is the lowest forecast for dollar-yen in each quarter. The green line is the highest forecast for each quarter, and the red line is the median forecast for each quarter. That's what's usually referred to as the consensus forecast. Again, I'm going to analyze the views of the highest and the lowest forecasts because those are forecasts that someone actually believes. Then, I'll tell you what I think. The Spanish bank Santander is the most bullish forecaster on dollar-yen. That means they think the yen is going to weaken the most. So, the green line is their forecast. The reasons are straightforward: monetary policy and capital outflows. The Bank of Japan is committed to continuing with its easing policy, while they believe the Fed is committed to tapering off its bond purchases. They believe that this divergence of monetary policy is going to drive dollar-yen higher. As you can see from this graph, there was in the past a decent correlation between the relative size of the Bank of Japan's balance sheet and the Fed's, the blue line, and dollar-yen, the red line. The correlation has broken down since Mr. Abe came into office, but that's probably because the market anticipated that the Bank of Japan would begin expanding its balance sheet. This year, the Fed is tapering off its bond purchases, so its balance sheet will grow more slowly, while the Bank of Japan is committed to keeping up its purchases for another year at least. In fact, Santander said it wouldn't rule out more easing from the Bank of Japan, given that many of the policy board members are still uncertain whether they'll be able to hit their 2% inflation target. Secondly, the government has started to encourage retail investors to invest more in securities, and Santander expects that to cause money to flow abroad. The government started what's called NISA accounts, Nippon Individual Savings Accounts. These allow people to invest 1 million yen each year tax-free, up to certain limits. The government is aiming to shift some 25 trillion yen from bank deposits into securities by 2020. A lot of that money is bound to go into overseas stock and bond funds. One reason they expect a lot of that money to flow abroad is that the yield spread, especially the real yield spread, is moving against Japanese bonds. Inflation is picking up in Japan, but the Bank of Japan's intervention is holding down the yield on bonds. You can see that here. The blue line is the difference in real interest rates on 10-year bonds between the US and Japan. It's been negative because although Japan had really low bond yield, it's had even lower inflation, and so the real yield on Japanese bonds has been surprisingly high. But now the real yield is falling thanks to the Bank of Japan. In the US, however, the real yield on bonds is rising as the Fed's tapering pushes bond yields higher even though inflation is falling. Furthermore, Santander points out that although the investment community is short yen, they aren't as short as they have been in the past. This graph shows what's called the Commitment of Traders report from the US. It shows the net position of speculators in the US futures market. It's not great, but it's the only thing we have to estimate positioning in the market. It shows that speculators are net short yen, but not as much as they were back in 2007. At the other end of the spectrum is Westpac, an Australian bank. They're the blue line. They think that dollar-yen is likely to end the year lower than it is today. In other words, that the yen is likely to strengthen. Their head of research, Mr. Robert Rennie, said that they're not fully convinced that the Fed is going to taper off its bond purchases smoothly this year. He thinks the U.S. labor market isn't improving as rapidly as people assume, and so the Fed might choose to keep its bond purchases unchanged some month. For example, the unemployment rate that appears in the newspaper headlines has come down to 7.2%, the red line. But if we include part-time workers who'd like to work full-time and discouraged workers who want to work but have given up looking for a job, the real unemployment rate, the blue line, is over 13%. Janet Yellen, the new head of the FOMC, is known to be more concerned about unemployment than Mr. Bernanke was. As a result, Westpac thinks that tapering could be a start-and-stop affair that takes longer than people think, rather than a smooth process ending in October. Westpac, therefore, isn't as bullish on the dollar as many other firms are. On the other hand, they're also not as negative on the yen as other firms either. They don't expect any further policy moves from the Bank of Japan for the time being, at least until after the bank has seen what the impact of the tax hikes in the second quarter are. Moreover, and this is a big difference, they don't expect any great outflow of funds from Japan. They live in Australia, and they know they haven't seen Japanese investors putting a lot of money into Australia, which is one of the favored overseas investment targets for Japanese. Nor have they noticed any flood of money into other markets. The data goes up to November. In short, they don't expect the kind of divergence in policy momentum between the U.S. and Japan that other people expect, and therefore they don't expect the kind of capital flows that others expect. And therefore, they don't see dollar-yen rising. So those are the two extreme views in the market. Again, if you ask me where I'd be on this graph, I'd say up there with the green line. I think that the U.S. is likely to continue tapering, and Japan is likely to add another round of monetary easing. Plus, I think even if Japanese investors don't start putting more money abroad, foreign investors are likely to start using the yen more and more as a funding currency. That means foreigners are likely to borrow yen and change it into other currencies in order to fund their trades, and that's likely to weaken it considerably. That's why I assume dollar-yen is likely to move substantially higher this year. However, I should point out that even though I disagree with Westpac, it was really valuable for me to talk with them. I admire the fact that they take a view different from the consensus, and I learned some new things from them. In particular, their argument that the Japanese aren't likely to put a lot of money abroad is well worth listening to because, as you saw, some people base their bullish dollar-yen forecast on the idea that there are going to be big outflows from the country. But this hasn't happened yet. This is why I always say that you should read a lot of information from a variety of sources and listen to what a variety of people have to say before you make up your mind how to invest. Nobody has all the information. Almost everyone can add something to your knowledge. Any questions? Comments? Please feel free to message me at mgitler@ironfx.com or get in touch with your IronFX representative. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.